Every morning, the countdown begins for the markets with meticulous research and analysis designed to help you capitalize on the trading day. Beaming live from the CNBC-TV18 Motilal Oswal studio.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. It's a Friday morning, last day of the week as we go into the weekend. It's not a long one. I think the last one was, guys, right? The last Friday, I think Thursday was the last day.
No holidays in September.
No holidays in September.
And Monday, the money markets are closed. So rubbing salt in the wounds of all the equity players.
All RBI holidays, no, all stock market holidays are RBI holidays, but not all RBI holidays are stock market holidays.
Two of them.
A point to start the show on. We're coming to you from the CNBC-TV18 Motilal Oswal studios. I'm Prashant. Nigel and Surabhi with me. Guys, morning.
Well, good morning. Market's a little bit jittery, but good times, right? Today's Onam, I think, at the last day. Happy Onam, yes. Prashant, to you, your family, and all our viewers as well out there. And it's Teachers' Day as well. So happy Teachers' Day to both of you. Learned a lot from you all over the last few years.
Likewise.
And all our viewers as well. We learn from each other. And in fact, wishing all the teachers, my teachers, all of your teachers as well, a very, very happy Teachers' Day. Let's keep learning.
Absolutely. And of course, the biggest teacher of all is the market. Right?
Yes.
Which we learn from every day in ways that we don't understand, but we eventually do kind of understand. Accumulated body of knowledge. And of course, that Onam wishes, Nigel, thank you. Surabhi, thank you. And in Malayalam, we say, Ona Shamsagal, which means the greetings of Onam.
Oh, lovely.
I don't think I'm going to be able to get out of the studio to get a nice Onam Sadhya, but we'll figure something.
We'll figure. We'll keep reminding you that that'll happen. And by the way, guys, I mean, it's been an interesting week for the market as well. In the midst of festivities, the Ganpati festival will be winding up, Eid, Onam. The GST bonanza has happened. But despite all the talk, all the sound, all the festivities, market hardly changed.
No, absolutely. And I think we'll talk about that in just a bit. Let's just take it from the top, right? And U.S. markets, for what it's worth, because it kind of sort of has faded into the background, what's happening in the U.S. It's very much local-driven events which are leading and, sort of moving the market here or there. At least the expectation is that it's going to be a dominant driver. So far, that has also not worked out. So S&P ended about 0.8 higher, NASDAQ about 0.9, almost 1% up. So U.S. equities, by the way, hitting new all-time highs last night. There is the big jobs data tonight, and I think it's important. Remember the last monthly jobs data, we came out that Monday, and the market really had a big move on the back of that jobs number. It was a shocker. So this one, in that sense, is going to be important. The consensus expectation is 75,000, but I think the whisper number is about 85 to 90,000. We'll see how this is going to come out. It comes out right at U.S. market opening bell. ADP jobless claims data last night, it kind of sort of added to the evidence of a cooling labor market in the U.S. The macro markets, the 10-year yield was down about 5 basis points. You had the dollar index, which didn't make a big move. It was kind of flattish. Oil prices continue to drop a little bit. Nearly 67. OPEC Plus is meeting on Sunday, and there is a concern that there's going to be more oil in the market, that they're going to once again increase supply, boost supply. Now I'll just circle and tie in the levels here. So the Nifty and the market broadly cooled off quite a bit, and so much hand-wringing and anxiety about why is the market not doing well, even though we've got the GST cuts, which were on anticipated lines. But I think, without getting, I don't think there's any reason to be pessimistic. This is long-term positive. We said this yesterday morning as well. Long-term is one thing, trading is another. In trading, what matters, of course, many times, more than, the news event itself is the pre-positioning. People were prepared for it. I mean, as I said yesterday, we reported point by point, and down to the last T, our colleague Timsy had reported on what items, what rates are going to come, and they all kind of were exactly the same what we had reported. Markets have done very well. The auto index was up 7%, consumer index was up 7%, the FMCG index was up 4%. That is 14th of August till the day before yesterday's close. So a lot of pre-positioning into events like this always is the case, but that does not mean that the event itself is somehow diminished or its importance in that sense is diminished. So, having said that, the levels are up on your screen. The Nifty resistance, let's just start with the support, 24,522. That's a support, immediate support for the Nifty. Resistance 24,878, which is the 61.8% retracement. Same level. Yesterday, that level got taken out and then we ended far under it. So that's the first one. And then yesterday's high, which is 24,980. So 24,878 retracement, and yesterday's high 24,980. And of course, support's up on your screen as well. For the Bank Nifty, the support is at the low of 53,561. You could look at retracements, you could look at hourly averages, but I think, the important one on a daily average basis is the 20-day. Bank Nifty, of course, the weaker of the two indices, has been for a while. 54,905 is the 20-day moving average as far as the Nifty Bank is concerned. So that's the setup. GIFT Nifty implying a 61-point higher start. Nigel is standing by with what the F&O stats look like. Nigel, over to you.
Well, we went through a phase where even bad news is being ignored. Now, what we have seen the last week or so is even good news is getting sold into. You've got a great GDP print. You've got the GST boost as well. And yet the market is not rallying big time. So that's the kind of phase we are in. But before we get to the trade setup, just want to point out to our viewers that, there are going to be a couple of settlement holidays. That's on the 5th as well as on the 8th, which is today as well as on Monday. And important to note that any share that you bought yesterday, today, or even on Monday, the settlement will happen only on Tuesday. So Tuesday effectively is a big settlement date because there are going to be 3 days where the settlement is going to take place on one day. What that effectively means is when you buy any of these shares, you'll see it in your account only on Tuesday, that too in the second half of the day. So just want to put that, and that could create some kind of margin headwind just in the near term, because there'll be some kind of, margins that will be a little bit crunch. So just keep that in mind. The good news, though, is that tomorrow the banks are open. So at least, there'll be some kind of movement. Moving to what kind of trading action we saw yesterday, the FIs went ahead. They had a short position to the tune of close to around 6,000 contracts, which took the short positioning in percentage terms at around 92%. And now you have the net short positions over the last few trading sessions, last 1 week or so. It's moved up by close to around 10%. So the FI net short positions are at around 1.88 lakh contracts, while the clients continue to remain net long. Short positioning at around this 1.9, around 2 lakh contracts, you'll be bracing for that short covering bounce. The problem is it's not durable, and the FIs continue to pile on the shorts. Moving to the PCR, then that danced away to around 1.2. That's come back to around 0.8. And yesterday, there were 2 strikes that were very active. But the call writers, they came back into play. Just take a look at the 24,900 call. Massive open interest built up. The open interest built up was close to around a crore. While on the downside, the put writing is still a little bit jittery. You can just look at the kind of built up. You've seen only 20 lakh shares out there. But that's the important mark, with premium at around 120 rupees, which gives you a broad range that we're looking at on the Nifty itself. So the recent high, the recent low, that becomes the important mark. So that's the broad range, 24,405 and yesterday's high. That's the range. In the near term, today, by the end of today, you'll want at least to defend the 20 DMA. We're 40 points away from there, so you'll want to defend that mark. And then you'll want to move up yesterday's high as well as the 50 DMA around the same levels. The Nifty Bank, that needs to find its form now. It's been a bit of an underperformer. But those are the important marks you're looking at. For today's trading session, you'll want it somehow to get past that 54,500 odd mark. That's going to be the important mark. And the reference point on the downside comes up for you on the screen. In terms of stocks that I'm looking at, Aptus, there was a large trade yesterday. That got cleared out. The stock actually in the last 1 month was a relative underperformer. Post a large trade getting out of the way, and if the management can get their act together, I'll keep an eye out on this stock for today and for the next few trading sessions.
Okay, all right. Well, by the way, if you're looking at the market overall, 5 trading sessions, right, and we are better off than where we were on Monday. There's no taking away from that. The Nifty is up about 1.2% so far this week. The mid-cap index has done even better, over 2.2%. And individual sectors, autos, metals, let's not forget, the rally is between 3% to as much as 4-5% on some of these sectors. So overall, it's been a good week, and let's see if Friday can add to the tally. Asian markets, by the way, are holding up quite nicely. Japan, China, all these markets are up. On Japan, the good news that came in was that those auto tariffs have been formally lowered, and auto is a big export for Japan. So that's what's driving the Japanese market. Hong Kong's up as well. Taiwan, mainland China. Most markets are up. So let's see if this rubs off on us. Let's pull up the implied open as we move along. Like I said, we've already added about 1.2% on the Nifty, and it suggests that the opening is going to be about 62 points higher. Okay, let's get to the equity call of the morning then. Yogesh Agarwal of HSBC says that the pro-growth initiatives adopted by the government and central bank this year have turned the environment more favorable for Indian equities. He says these GST changes combined with benign inflation, income tax cuts in February, and accommodative monetary policy create an environment for sustained growth. He says a revival in demand should also provide a much-needed boost to private sector capex that has been sluggish for several years. That's a view from HSBC coming through.
For more news and updates, all you need to do is follow CNBC TV18 on all of our digital platforms.